Good morning. I hope you guys doing well and welcome to today's edition of the London Session Open. Today is March 24th, 2020 and it's 9:41 a.m. in London when we do this market update. If you are subscribing to the channel, you should now have received a notification that we're live. If you didn't, it means that you're not subscribed and you have not clicked on that bell button. Subscribe and click on the bell button, and then you don't have to worry looking out for my Twitter feed or exactly when we're going to start, because you get that notification, and that's all you need. If you have it on your mobile app, YouTube as well, you get that immediately. Otherwise, I think they send it to you via email. Very, very straightforward. All right, guys, we're going to talk a bit about markets and a bit about the economic data. So we have the leading economic indicators out from Europe, and the composite, which is the combination of all the different countries in Europe, saw a significant slide. Was at 51.6. Above 50 tells us that the economy is growing. So it's 51.6 in the prior month, but in March, the number tumbled to 31.4. What's quite interesting, though, is that the manufacturing sector is holding up relatively well. This is for the European one. So it was 41.9 in the prior one, it's 44.8. You saw manufacturing holding up here as well in Germany and in France. What's taking a big hit is the service sector. So you can see then reading here came down to 28.4. I don't know, but that's probably the lowest level on record. Wouldn't surprise me a bit. And this is not unsurprising because like Lufthansa is struggling. I mean, they're down with some 72% since their all-time highs. They're looking at potentially getting bailouts. Some airlines, you got some hotels that are just shutting down, people just getting laid off. So there's no business now as well with hotels and bars and all of that. There's no business right now, and that is why this is declining. However, if you look online about people in China, things are starting to come back there, and people are out on the streets again. So things look good if we can just wait 2 months or so before the data starts to improve again. So things are quite interesting, and actually what I'm more interested is not this data, it's what's going to happen on April 1st when we get the next numbers from China. That is the data that I find interesting to see how much things have bounced back, even though of course things just started now for the last week or so, so the numbers are still going to be depressed. But come next month, April, and if the numbers are solid back then we're just going to be laughing about this whole situation and how we managed to get so scared. Of course, people need to stay home for this to work. And yesterday on Twitter, I actually put something out, and the situation is actually quite nice in many parts of the world. So for example, this is Italy. So for the markets, it's all about daily growth rate. That is what's important. So the daily growth rate in Italy was 24.4% on March 9. On that day, they imposed national quarantine. Everybody had to stay home. And now lately, they introduced even more where factories as well need to shut down. But you can see here that the latest reading is of just 28.1%. So this is a significant decline, even a bit more faster than I thought. And this number could probably continue to decline. And we're seeing a very similar pattern that we're seeing in places like China when they started to lock down. We know as well that France has been under lockdown for about 1 week, Spain as well under lockdown for about 1 week, and the UK more direct orders last night to stay home, and that as well is going to improve. The only problem right now is the US. They're seeing daily growth rates of about 30%, which means that the numbers in the US are going to continue to increase. Now that is probably going to change at one point. For example, the reason for the numbers being high in the US to begin with, by the way, is because they didn't have enough testing, so they were being lagging behind. The other thing as well is that we have now seen significant less traffic on the roads in the US. You're looking at 60% decline in congestion, in some places up to 85% decline. In places like California as well, they ordered their citizens to stay at home. So things are going in the right direction, and if more and more is done in the US, maybe and now you have the UK as well. Things are looking quite good. As well, in the case of Germany, I don't have the numbers here to show you, but the growth rate as well is about 10% per day. So things are not as bad as it looks like. Of course, people are dying, and that's a big issue for everyone involved, especially if you actually lost someone. But from a purely economical perspective, because that's what we're focusing on here, then things are actually improving. So things are looking good. Now, for the German DAX, so the German DAX is up a bit today on the back of those news. And you might say, why is it up? Well, remember, the whole thing has collapsed. So it collapsed from a high of 13,864. It declined with some 42%. I mean, that's a huge number. That's why already last week I said, if you're a long-term investor, you're a pension holder, this is the time to buy. It's the time to accumulate. If you're short-term trader, you just follow the charts to trade them. So what's happening here is that the number we had out is not as bad as people thought, even though against the consensus it was. And I think, again, people are forward looking. This whole thing collapsed because the data we're going to have over the next few weeks is going to be bad. So if the data is obviously more and more bad, then it's going to become an issue. And then, of course, you have the central bank of the US just flushing the markets with money, and they're going to buy unlimited amount of treasuries now. So that's why this market is going up. Now, from a trading perspective, this now is trying to break the upside. You get yourself a head and shoulders with a head, left, and right shoulder. You're having that break to the upside. The target itself for this pattern is 10,400. So we can work with that if you want to, if you're sort of the scalper type and you want to take some risk on. The alternative is that you look for a bit of a decline. Why would you look for a bit of a decline? Because if you look at stuff like the S&P 500, we're still dealing with a downtrend. Yesterday we said, look, to sell here for it to come down. It did that spot on. Did that good. Right now, it looks like the indices have limit up, which effectively means there's no more trading in the NASDAQ and the Dow and the S&P because it gained with more than 5%. Maybe what's going to happen now when the US opens again is that this going to go a little bit higher, but we need to clear this high here before we can say that this is a proper bottoming out in the S&P 500. And because the US indices are still under pressure and because the numbers in the US are still bad, maybe the trend, at least in the US here, is going to continue for a bit longer. And if it indeed continues to soften here, then that can definitely stop the German DAX in its tracks. And that's why I do have two options: buying on the dip, which is my preference. The alternative, if you want to take some risk on, you're looking for that quick push to the upside here for a little bit of scalping, maybe to 9,600, 9,889. If we look at the euro is also up a bit here, despite the numbers not being as good. Because again, the markets are forward looking, and the euro has been down, and the dollar has been super strong because shortages of dollars across the world. But last week, as you know, the Federal Reserve introduced swap deals with the fifth largest central banks, and then they expanded that to even smaller banks like the Swedish central bank. And before, they were just giving swaps on Wednesdays, so they only saved the day on once a week. Now they have this open continuously so they can save the day every day, and we're seeing a bit of stabilization here. Now, from a purely technical perspective, if we just get rid of everything, you have yourself a double top, and then you get that correction, and then you got that push. Now, this is, you draw a trend line here, and like that, you even got yourself an ascending triangle. And if you just want to draw a trend line here and here, you got yourself a simple range. You have to break to the upside. We can go a bit higher and maybe all the way up to the target here. The various ways of trading this is a bit like the German DAX. You know, we can buy here if we want to, but my preference is to wait for a bit of a dip and then higher. GBP versus the USD. I'm sticking to my guns here that this is the bearish trend. I think even if it's the beginning of maybe a reversal, if it is, it will still go up a bit, and then it will still come down a bit, and that's what I'm looking for. Maybe let it go up to 118.15, and then we'll come back to 116.20, 115.50, and then we'll look to book profits here because things are starting to stabilize. What else? Dollar yen. So dollar yen is under within this tight narrow range. So if we take out these highs, we go a bit bullish. If we take out the low, we go bearish. Seeing from a big picture perspective, we still have the Sanders pitchfork, and it does suggest we should probably sell at 111.17, 71, sorry, with stops just above the high. Crude oil prices. Crude oil prices are a little changed. So a few days ago, we said, look, to sell here for this to come down. We got that spot on. And now I'm waiting for it to go up again. And then we're all going to go down again here again. However, take out 28.6, have a bigger correction up, and then probably down, and then probably up again. And this is gold. Gold is doing really, really good. So remember a few days ago, we said, look to buy here in this region. We reached the first profit target. If you booked profits yesterday, good on you. Obviously, if you booked only half, even better now, because you will be in more of a profit. Can this market continue to go up higher? Yes, of course it can. Is the risk reward ratio good at these levels? No, it's not. It's not good. So I would not be buying at these levels. That's why I took fib from the low, high, and looking for that dip. Sometimes, and this is what's so frustrating with trading, that it's a lot of hit and miss. It's not something you can be banking on to make money every week, every month, even every year. You can't bank on that. And sometimes, for example, you know, we said here, look to buy, which was a very good reward ratio. And of course, maybe it'll go all the way up, and this would have been a terrific trade. But most of the time, as of recently, you can have a bit of profit, and then, you know, if you hold it for too long, you give that back. And that is the challenge. It's very volatile now, so that's why booking half of everything here was not a bad idea. It was good, sound, common sense things to do. And that's pretty much it. I think we covered all the main markets. Let's see if you guys have any questions before I need to leave for my 10 a.m. call. So we have Antonio Jimenez. Good morning to you. I hope you're doing good and I hope you're holding up well. We got Shaquille Khan. Good morning. Good morning to you. Does the S&P halt limits going up? Yes, so it was halted here. And there has been some changes in this. So sometimes it halted now, right? So we need to wait. I think it's 8:30 a.m. Chicago time. That's when they're gonna reopen again, around that time. So it's been halted. So there's no trading here. You can't get in, you can't get out until they open for trading again. And that should be 8:30 a.m. Chicago time. Now, Ronnie Giles, good morning to you, sir. And we have Nico as well. Good morning, Alex. People are saying that the top traders are making a killing out of coronavirus while thousands of people are dying. Well, yeah, I mean, volatility is high. Volatility is high. And it's not just about top traders. It's humans in general that want to have a piece of the pie of this. Because, for example, I know that many brokers now are having like record months just because people want to take advantage of the volatility. So, for example, already like 2-3 weeks ago, when things were closing down in Italy and in Spain, normal people wanted to open up accounts to take advantage of the market volatility. So the question is, I mean, morally, is it right? Is it wrong? It's a difficult one. But the speculator offers a few good things, and it's question forward. You have people that don't want to speculate; they just want to reduce risk. So people that want to sell their holdings right now, who's gonna buy them? It's usually a speculator, someone on the other side that thinks, hold on, this has declined a bit too much. So not limiting, keeping people away from speculating would probably lead to more dysfunctional markets. Now, there is some stuff that sometimes is a bit exaggerated, and the ability to make money on short sales. Now, I think short sales should be allowed, but to some extent. And what they've done in Italy and I think France now is that they have banned short selling because the regulator figured that, okay, the markets are down with some 40%, so maybe this is it. And it probably is it. Like even some companies like Lufthansa is down with like 70% from its sort of recent highs. I mean, sometimes what happens is that traders force and enforce things so they become self-fulfilling. So you can have a company sometimes that it is all good, but then everybody's sort of selling it, and then suddenly the credit lines of the company are being pulled back because their share price is down so much, and that removal of the credit lines itself causes the company to go to default. Now that's bad if it's a perfectly sound company, but most of the time the companies that are being shorted, they're not perfect companies, so there's a benefit of people short selling as well. So that's how I look at it. And the way I look at it as well is that why are so many people dead? Because politicians got it wrong and the people got it wrong. I've been showing you here on my screens. I mean, people in Spain and Italy, they're going out, and even in France, they do their own thing. Even here in the UK, I was at Tesco yesterday by lunchtime, and you have this old granny in a wheelchair, and her caretaker is using a mask, but the granny itself is not using. She must have been at least 80 years. I mean, she's in a wheelchair. People take unnecessary risks. I know people that are, 60, that should be much more careful than me that is 35, but they're not, because they think they're not gonna get the disease. One guy at one of the offices I've been to thinks that drinking alcohol is good for you because it kills the virus. And they do this in 2020. So personally, the way I look at it, I think people can have themselves to blame for it, many of them. Because they don't follow up on the trends, they don't educate themselves, they definitely don't take precautions, even though their own prime minister told them to stay at home. And this is here, even in places like Spain and France, like people are sitting down around squares just talking and sharing a smoke, whatever, and then they wonder why people go and die. So what can we do? These are the rules of the game, and yeah. Okay, guys. Need to wrap things up. It's 2 minutes until 10. So let's see if we can ask some quick questions here. The New Zealand dollar, CAD, or the Aussie dollar. So we can look at the Aussie dollar. So the Aussie dollar is improving a bit, and it's up here. It's very, very close to end its very short-term downtrend, and it will end the short-term downtrend on a break to 60.33. So when we take out that level, I would no longer be bearish to Aussie. It's fine to sell here for it to go down a bit. So what's happening here, and I was looking at this yesterday actually. So the US GDP in 2018 was $21 trillion. However, did you know that outside of the US, there is about $12 billion in loans in dollars? So about half, there are loans that amount to half of US GDP, and these loans are outside of the US, issued by foreign banks in dollars. And these banks, they don't have automatic access to US dollars. So what's happening here, and I think what happened over the last few weeks, is that people that are holding these dollar loans, for example, if they're based in South Africa, where the local currency is the South African rand. So if they're making money in rand, their clients are paying them in rands, and then suddenly their system, their business is going down, and then the South African rand is going down. Well, they still have a loan in dollars, which might be 20% more expensive now. So I think what happened is many of these companies, and it was actually in particular in Southeast Asia, it wasn't necessarily South Africa, but in particular Southeast Asia, where they had these dollar loans. So what happens is that I think some of these companies, they went out and they said, okay, we're going to hedge our dollar positions. So that's why everybody started to buy dollars, and that pushed the price up. Now what happened here is that the US government should do swap arrangements with many local central banks, or many central banks across the world, which means that the person that wants to hedge their dollar loan doesn't have to go to the open market directly. If they go to their bank, and then their bank can just go to the local central bank, and then the central bank is going to lend them money, and that money effectively comes from the US. Okay, we're going to wrap things up. I want to thank so much for watching. Don't forget to click on that button here, very straightforward. Just don't forget to like, and don't forget to subscribe, as I said before. As well, don't forget to follow me on AlexFX00. Have a great day, guys, and thank you, and bye-bye.